Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. Well, the U.S. government shutdown is over, and it looks like there may be a stock market rotation going on. The Dow Jones Industrial Average for the week had a great start, but finished off just up 0.3%. Year-to-date, up 10.8%. S&P 500, same thing, finished the week up slightly up 0.1%, year-to-date up 14.5%. Nasdaq, that's where the pain was, off about 0.5%, even though we had the volatility this week. Year-to-date up 18.6%. The star is still the international index, the MSCI EAFE index, up 2.8% this week. Year-to-date up 26.1%. Wow, and the 10-year Treasury moved a little higher with concerns that they may not raise or lower interest rates here in December, so that rose to 4.15% on the 10-year Treasury, and oil was up slightly, 0.4%, closing off the week at $59.96, getting real close to that $60 a barrel. So after 43 days, the longest U.S. government shutdown came to an end on November 14th, and that means you can go back to the airport and most likely not have to worry about your flight being delayed or canceled. That happened to me last week. How about you? But it's not over. The Affordable Care Act, the ACA, health care premiums are expected to rise after December 31st as subsidies expire for most of the 24 million people enrolled in that marketplace. And as part of the U.S. government reopening, the Senate will schedule a vote by mid-December to extend the ACA subsidies for 3 years. Although there is no guarantee of this passing in both the Senate and the House, if no deal is reached, health care costs will likely rise, and the chances of a repeat shutdown after January 30th of next year, well, guess what? That can't come back again. So like I said, is there a rotation underway? I got a lot of questions this week about the AI bubble. You've probably been hearing about it. And so technology and AI sectors this past week and really most of November have been underperforming after a very strong rally since April. Consider this, since April, the rally has been about 55% up in the Nasdaq, and that was since the April 8th lows. The technology sector may have been due for a period of consolidation, and maybe some people are actually taking some profits right now. We believe that this is especially true as we head in towards December 31st, year end, where investors think about rebalancing their portfolios, maybe taking some of those profits before 26. And mega cap technology companies are facing challenges from rising debt levels. They are shifting to asset business models, and this could potentially impact the margin and free cash flow. And this is because some of those mega cap technologies who are investing heavily in AI, historically they've been pretty cash rich, but now they're starting to issue a lot more debt to finance these AI increases that are consistently drawing that capital. And we think this trend is particularly concerning in a more debt-burdened company like, say, Oracle. We're also seeing rising debt levels in companies like Meta and Google. And over time, this could weigh on the profit margins and free cash flows of these companies. And so, again, just be mindful of that as you look at your overall portfolio allocation. With all that in mind and with the volatility that we've seen, what do we think? Well, I expect a gradual recovery in the first quarter and through the remainder of 26. I believe that the lower tax rates that we're now experiencing and going to be able to take advantage of on not only the individual but the corporate level will help. And certainly with the government resuming once again. And so maybe some of this is a little bit overdone in the AI sector. And so that's what you're seeing, these fluctuations, particularly with some of those values just getting very, very high. So what can you do in this environment? Well, I always believe that diversification matters. And certainly over this past couple of weeks and this backdrop, and diversification has held up. And so you might want to use this environment to rebalance your portfolio, to your risk level and your income needs that you're looking for. I continue to see that a lot of people have heavy concentration in their company stocks or in ideas that they liked, and now they've gotten so far ahead of where they thought they would be that it's surprising to them. And they just don't know what to do because I think it continues to go higher and higher. This reminds me a lot of the dot-com bust. Some of you may remember that, 2000, 2003. I was lucky or unlucky enough to be going through that with clients at that time and saw lots of people do very similar types of things where the values got to be excessive and they saw no end in sight and they just held on to it all the way down to, well, you know what happened. The other side of that, where a lot of people lost a lot of money. Not that this is the same, but just goes to show you diversification is a good idea. And now with tax rates being permanent, this could be your opportunity to rebalance some of that, take some profits. And if you do it in a smart way, which we'll talk about today during the show, then it won't be so painful to you, and you could still get that exposure that you might need.
You can hear the Protect Your Assets market briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets market briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.